Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. Jazakallahu khair for joining us for another episode of Balance, where faith meets finance. We're super duper excited to have a brand new episode, something different to do today. We have with us Brother Nader. He's actually the team lead at Manzil Realty Group. He's extremely dedicated to helping all sorts of different kind of clients across Canada with his team to achieve their goal in a way that aligns with their values and their faith. Our motto here at Assad Wealth Management is Deen plus Dunya. That's exactly what he's doing, but he's doing it at the real estate realm. Nader actually is extremely popular. If you don't know him, you can actually follow him on Halal Talk or TikTok. I'll get him to confirm that for us in a second on Instagram. 30,000 followers over there. He provides personalized Sharia-compliant solutions, whether it's your first home, or if you're an investor, you buy and sell real estate. He is your man, and his team is actually your people that you want to talk to. So we're going to get Nader to come in. And of course, we have our Sheikh Navaid Aziz, my partner in crime, that is always here with us. Assalamu alaikum wa rahmatullahi wa barakatuh, Sheikh. Sheikh is frozen. Assalamu alaikum, Sheikh. Assalamu alaikum, Nader. Can you hear me?
Alaikum assalam wa rahmatullahi wa barakatuh. Yes, I can hear you.
So good to see you, bro.
Likewise.
Jazakallahu khair for joining us. We'll wait for Sheikh Navaid to come in a few seconds, and then inshallah we have so many questions for you. We're super duper excited to have you join us. Real estate is a completely different realm when it comes to investments. A lot of people have a lot of money invested in real estate, and there's lots going on. There's lots going on across Canada, and we have so many different questions for you. So while we wait for Sheikh Navaid to come in, is there anything you want to say before we start asking you a whole bunch of questions? I don't know if I got your username correct for Instagram.
Yeah, you totally butchered it, man, but it's all good.
Okay.
So it's at Halal Stock Talk. So that's TOK, because initially my account was on TikTok, so that was just kind of like a play on talking about investments at the time.
Yes.
Then we just kind of spilled over into Instagram, just as kind of like a back account, because there was always the threat of TikTok going offline. So that's kind of how that went by. But alhamdulillah, it's been a crazy ride since I started it, and alhamdulillah, I just hope that it's a sadaqah jariyah for me eventually, and that it can help push me up a couple of ranks when it matters the most.
Right, man. Amazing job. So HALALTOK or no?
Halal Stock Talk.
Oh, Stock Talk. That's what it is. Okay, halas.
Yeah,
Okay.
because back then stocks were the thing. Now it's like crypto and whatever you want to throw at it. So we had NFTs for a short period of time, which unfortunately, I'm a proud owner of a hijabi queen's NFT.
Okay. Tell us about that. Tell us about what did you buy?
So I actually didn't buy it. It was gifted to me. But they're like, yeah, this is going to be great. It's going to pick up. And these are really rare and exclusive. It's probably not worth anything right now. But at the time of the peak, they were going for thousands of dollars, which is crazy. Just for a kid spending 5 seconds in MS Paint and then, tokenizing it and selling it online.
Yeah. I saw those days, man. That's how you know you're in a bubble. Okay, so let's talk about, we have Sheikh Navaid, he's lost here. Can you talk us through while I help Sheikh Navaid? I have a question for you. So many people, right, are waiting on the sidelines when it comes to housing, when it comes to hoping the prices will drop. I want your thoughts on, number one, what's happening in real estate across Canada, right? You have pockets that's, Vancouver and Toronto, right? Those markets have seen significant corrections when it comes to real estate. You have, the immigration aspect of it. So I want to talk to you a little bit about that as well, because that has stopped effectively. Not as many people are coming in, not as many people are buying. And then, how realistic it is to time the market. Should people wait now? Should they buy now? What do you recommend nowadays when it comes to real estate itself?
Yeah, so timing the market is almost impossible, right? It's just one of those things where even economists get it wrong. Like they can, postulate all they want, but nobody's got a crystal ball that's going to give them all the answers. Only Allah knows at the end of the day. But
True.
all we have to do is kind of rely on statistics, where we can take a look at, the history of the market and kind of like make some assumptions based on that, based on current indications. Like obviously a lot of people look at, unemployment numbers and inflation numbers and the interest rates to kind of get an idea of what the market is going to look like. But it's just a supply and demand curve at the end of the day. So if there's people who want to have real estate and there is an abundance of inventory out there, which is kind of like what we're seeing in most markets, then obviously that's going to drop the prices, which is what we've seen. But once we get to a point where the inventory is starting to get depleted again, and that's kind of been Canada's main problem across the board, which is not having enough inventory and enough new units that are entering into the market to offset the rate of immigration or the net migration in these areas. It just makes it kind of impossible to get it, like, to find a way to like guess. Like you can't like time the market. It's about your time in the market rather than getting the timing right. You just have to focus on like timing your own life, and you got to see how your income is, what your family needs, if you need that kind of stability. Because again, first time home buyers, what they need to do is kind of see if they're able to like kind of get into this market to begin with. But it's really hard to draw a conclusion. Like even in a province like Alberta, where you have a market like Calgary that's been pretty slow all year, and then just 2.5 hours up the road in Edmonton, it's been on fire. Like there's literally no inventory out there. And it's probably has to do with the affordability, because Edmonton is extremely affordable, where now Calgary isn't as affordable as it used to be. So,
right. So I guess so the conclusion will be is that you go based off of what you need, when you need it, and you buy based off of that versus trying to time the market.
Yeah, 100%. And again, a lot of people try to justify that their home is an investment, where I can kind of get that given like, the tax haven that we have for like your primary residence here in Canada, but you shouldn't treat it as an investment, right? You should treat it as your home, which is why like, it doesn't matter when you buy, it doesn't matter whether the prices go up or the prices go down, because it's all about like your long-term goals. And this is usually what I tell clients is that, if you're planning on living in this home for like 10, 15, 20 years, just based on statistics alone, you're probably going to be in an equity positive position, and it can be an asset that you can use later on, but it's not necessarily an investment. It's just, a place for you to kind of like hang your hat, and that's it. Right.
Fair enough. That makes a lot of sense. Just wanted your thoughts before Sheikh maybe ask some questions. What's happening in Toronto and Vancouver? I know there's the real estate market has corrected. I mean, you can't have anything go up steadily, consistently for that many years in a row without being a correction of some type. What have you seen? What have you noticed there?
So what I've noticed is that in both like these huge metro markets where we've had an unprecedented amount of growth over like say the last 10 years, like especially between the years of 2017 to 2022 prior to the correction across Canada, where basically we saw prices double in a matter of like 5 years. Typically in Canada, we have a statistic called the doubling rate, which is essentially how long it would take for your initial purchase price to double in the amount that it's worth. And typically across Canada, it's around 15 and a half years. Different areas across Canada can vary. Like in the GTA, we're probably looking at 13 years. In Vancouver, it's closer to that 15-year mark. But if you buy something for $1 million today, then in 13 to 15 years from now, it's going to be worth $2 million. However, in that period from 2017 to 2022, the average price almost doubled in that 5-year span prior to it correcting. Now, that's what I would call a correction. A lot of people were calling it a crash. I'm just saying that, there was an unnecessary amount of, buying because money was so cheap at that time. And that's when the rates started to go up. it corrected almost instantly, which doesn't make sense also, but it also speaks to like how inflated the market was at that time. But now we're kind of more level towards what we were seeing, say, in 2021 in terms of pricing, right? A lot of people think that there's more room to go down. I feel like that's not right. I feel like we are already seeing more activity in the market right now, where buyers are more confident. There isn't a lot of this fear that there initially was in the beginning of the year. All thanks to our partners down south. So I think that, along with the political instability that we had here with regards to the government and jobs and all of that, there was a lot of fear out there, which prolonged the downturn for where we were seeing, especially in Toronto and Vancouver, because those are like the most expensive markets in Canada, but they're also the markets where people make the most money, like Canada-wide. And if you take a look at average income earned over as a metric, like worldwide, Toronto is actually number 17 globally in terms of the amount of income that the average person generates, right? So with that being said, like, affordability technically isn't that big of an issue when it comes to the limited amount of real estate that we have here in the GTA, but it can make a much bigger difference in, like, Red Deer, Alberta, or Longueuil, Quebec. So it really depends on the market and the conditions there. But over like time, like it's just the market moves in cycles. But what we've seen over time, over the last 50 years, is that downturn doesn't last too long, and there's a clear trend going up.
It's funny they mentioned that it takes 15 years to double. If you go based off of that, it equals to about 4.8% average ROI, annualized ROI. If you use the rule 72, if you double every 15 years, about 4.8% growth.
Absolutely. And even when I talk with my clients, I tell them to assume that they're gaining maybe around 3% on their purchase like annually, right? And if they're putting 20%, 30% down, then it's similar to like being able to leverage an asset and have it grow. And if you were to put that same amount of money as a down payment, you wouldn't generate as much revenue based on it, because you're essentially getting 4 to 5 times the return back just for having your 20% down.
Yeah, I think real estate works because it's forced savings, number one, and number two, using the rule of leveraging. You put $100,000 down on a $500,000 home. That property goes up, 10% as an example. Well, you just made 50% ROI on your $100,000, even though you leveraged the other amounts. So it kind of makes sense from that perspective. Sheikh, welcome back.
Jazakumullah khairan. My internet crashed, and then I couldn't get onto the platform. It signed me out. So alhamdulillah, I'm back now. But yalla, let me add in my 2 cents. Jazakumullah khairan. Nader, first of all, it's an honor and pleasure to have you on the podcast. Jazakumullah khairan for joining us today. I want to pick up where you left off, man. And I think this is not highlighted enough. Like, even after a period of 30 years, let's just say your property keeps going up. A lot of times people are not calculating their property tax and their maintenance into their profit, right? So it's not just like gross profit that you're making. You have to deduct the amount of property tax and the maintenance that you have to put into your house as well. And I know we have a question coming up on real estate as an investment. So I'm really hoping you'll highlight what are the things that really need to be taken into consideration as we consider real estate as an investment. But before we get to that, my question for you, sir, I'll share a personal story with you. I have a friend of mine that purchased a house in Airdrie in 2008. He stayed in the negative all the way till just before the pandemic. And only after the pandemic did he turn into the black. Like, he started making a profit. So there's a lot of myths with regards to real estate that you're guaranteed to make money over, X amount of time. I was wondering, could you tell us about some of those myths, and then how do we dispel some of those myths with regards to real estate?
Yeah, 100%. So I mean, like you just
You lost everybody. Okay, we're back. Okay, that was a myth.
Sorry, Nader. Continue. So you were
Someone shut
saying
us down. The powers that be didn't want me to like divulge this information.
Allah al-Mustaan. I don't know what's happening today, man.
So I'm just gonna bring to the forefront the huge market crash that happened in 2008, right? So there was the mortgage crisis in the US, and both the Canadian and the American real estate markets dumped for the most part. And then you had the dot-com bubble that kind of burst like before that as well. So it was really some tough, dark times like for, for any sort of like investor during those times, right? But my wife's from Chicago, and if you take a look at the real estate market there, it really hasn't appreciated much since the crash in 2008. Like if you were to buy a home, like if we were taking a look at her area where her family lived, a typical house costs around 350,000 US. Today, the house would probably cost around the same, or maybe even a little bit less, unless there were like actual upgrades that were done to the property where it would be reflected in like, the purchase price. But for the most part, like it's been flat. In Canada, alhamdulillah, we have a way around that where like it does continue to go up. Although it really depends on the time that they had decided to enter the market. Because even though we do have a trend going upwards, you have these dips. So if you have like bought like prior to this dip actually happening, it really depends on how long it would take to correct and how bad the correction was. I'll give another example where for my own personal house, where I bought it from the builder about 3 years ago. And when we closed, obviously the market now is not the same as what it was. And my neighbor had initially just bought the house as an investment and tried to flip it. And he wasn't able to sell the property and was on the market for almost, I want to say like 8 months before it dropped in almost like 30% in comparison to the price that I purchased my own house at. And this is something more recent. So I'm already like, 35% in the red from where I had initially like purchased my home. But again, if we're planning on being here for 10, 15, 20 years, there's no way that we're going to be on the losing side of that transaction, especially as we're continuing to make payments on our mortgage, on our, like the maintenance over time, like the equity itself is going to grow. And hopefully in the next 15, 20 years, it's completely paid off. And, there's an asset there, regardless of how much that asset is. If you're renting, you're probably not going to have an asset at the end of it, but there's also an opportunity cost as opposed to like, what the difference is between say renting and buying, where let's say the rents in your market for a similar house is like say $3,000 a month, but the mortgage for it would be around $5,000 a month. So if you were to invest like the extra $2,000 a month while renting, is it going to grow as quickly as this $5,000 a month mortgage that's technically leveraged? It again, it really depends. If we're in one of those times where it's going to continue to stay flat for the foreseeable future, probably not. And maybe renting is the better option. All you have to do is kind of think of it that both renting and buying have a place, depending on your stage in life and depending on where you decide to, put your flag down and call it your home.
Jazakallah khair, man. Really appreciate that.
But, yeah.
Hash?
Yeah, absolutely. Another question for you, Nader. A topic that's very, very near dear to our hearts, which is faith and finance, right? Deen plus dunya. I know you're involved in sort of both of these realms. And in a home purchase, subhanAllah, a lot of our clients don't quite have the money to do that. That's actually interesting because over the last 10 plus years, one of the solutions that I've been advocating for is buying a home with cash. It's not for everybody, of course. It takes a long time, a huge commitment and resources to save money, to invest your money, to stay patient, tell your family it's okay when they were going to get that house. But we have many, many clients actually who are in a position to buy their home with cash because they've been diligent in saving. And alhamdulillah, the markets have been very, very good. So that gave them the extra boost to do that. But for, I would say, the other 98% of the people who want to buy their home, they're eager to buy their home. They have the income, they have the down payment. What do you recommend they do to try to balance their deen and dunya, right, without going into riba. Perhaps your thoughts on some of the halal mortgage options that are available, either through Manzil itself or through what we have here in Alberta, the recently launched Service Credit Union mortgage options. Like, how do you balance these two, man? I know you are at the forefront of this, right? You're advising people to buy homes and getting involved in all sorts of different kind of financing.
A lot of the time where like you always hear like that old adage that the best time to buy real estate was yesterday, right? But depending on when the yesterday was, like if you take a look at the last 5 years, as long as yesterday was prior to like say November of 2021, then you probably would be right. But the minute you started going to March and April, the right answer for that would have been tomorrow or the day after or the next month, just because again the prices were kind of falling off a cliff at that time. But a lot of the time when I'm dealing with Muslim clients, and like 90% of my clients are Muslim, avoiding riba is non-negotiable, right? Like there's always a way where some people are always thinking that, maybe I'll use this fatwa, maybe I'll, like try to bite the bullet and continue to rent for the foreseeable future. Like what's wrong with renting, So there's always a lot of justifications that can go either way, but conventional mortgages are interest-based, right? So if you're following like, the deen the way it should be, a lot of the time, unless there's like a dire need where like, let's say you have like a large family and no one will rent you a house, as long as you discuss it with, your local imam or scholar and they're able to, confirm this dire need, then that would be the only time where, again, like in our faith, it just makes it easier as long as there's like, some harm that will happen for us to, dabble into the haram, but not to the point where, you're like going for like, the largest mortgage that you can possibly touch, right? So I guide a lot of the clients that I work with towards these different types of opportunities, regardless of whether or not it's with Manzil, right? So, so the co-ownership that Manzil has, like their partnership and their musharaka, where payments go towards like buying their shares and not paying interest. Like if I were to talk to say 10 different people, 2 of them would be okay with anything as long as they're sure that it's Sharia compliant. 2 of them would say that we're a bunch of crooks and we're just trying to rob the community blind. And then you have another 6 who are on the fence where they have real concerns about affordability, because obviously products like this are more expensive because of how the investments are sourced, because of the type of risks that are involved with these types of products. So it really is a tough internal battle when it comes to trying to essentially fulfill the Canadian and American dreams of owning your house while still trying to keep your faith. So it's definitely about balancing both faith with your financial goals. Like you don't need to compromise on your values in order to buy a home. And alhamdulillah, there are a lot of options that are currently available, albeit, a lot you can say that if you really like dig down into their contracts, you can say that maybe they're not Sharia compliant, but they're obviously a whole lot better than the options that we would have by like going to the big banks, right? But I feel that we're at a time right now where there is an abundance of options available, and we're at a really good opportunity right now where we can buy. So if people are sitting on the sidelines waiting for, the market to drop further, I wouldn't suggest to like kind of wait on the sidelines or waiting for another competitor to enter the market like Service, especially with a flexible product like Manzil's, where, you can, marry the price now. And if in the future, the rates do seem that they're much better on the other side, it's an open product. You can just buy out your shares without necessarily paying any more profit, and then go hang your hat somewhere else and pay the lower profit rate at that time, right? So I think there's more of a need to try to take advantage of entering the market if your financial capability allows you to do now. So if you have your money put aside, your rental situation usually isn't the best. If the prices have dropped in your area, like if you're in Calgary or Toronto or Vancouver, we literally took a time machine back to 2021, and it's a very rare opportunity that you're probably not going to get anytime again. So you just have to remember that if people are continuing to save for that like 20% down payment, like right now, whatever money they've been saving has gotten more value over the last few years because of the price dip. But here in Toronto, where the average price of a home is $1 million, a lot of people find themselves always like chasing that elusive number of the 20%, because unfortunately most halal products right now you can't buy with less than 20% down. And that can be another argument for another day, where like, you know, the the lower down payment, since they have to be like, you know, insured mortgages, aren't Sharia compliant. It's always going to be like a race that you're never going to be able to win. Like the minute you start to like say, okay, now I have 200,000 and my ideal home is 1.2, let me just wait until I get another 50,000 and I might be able to get it. And then if you wait for another year to get that 50,000, that same house that was 1.2 is now 1.3. So you're always going to be in that rat race, and you're never going to be able to break the cycle until you can actually, you know, just bite the bullet and see where it is that you can, you know, kind of have all these factors kind of go together to be able to essentially like balance like your rewards for being able to get into this market right now, and for your long-term goals in terms of being able to secure like, you know, equity for your family in the future.
Could you remind me, I know rates have spiked significantly since 2022 because of the inflation scares in Canada and the US. So inflation, basically, to control inflation, rates have to go up, and there has to be incentive for people to stop spending and invest that money, put it into high interest savings accounts, stuff like that. I know, since I have kind of looked at the rates, halal mortgages, we do pay a bit of a halal tax. That's fine, and these have been sort of like the 7% plus range, right? When the prevailing interest rates were, you know, at 2%, like you can get a 5-year traditional mortgage at 2%, have 2.99 was like you can just walk it in any bank and get one of those. What were the halal mortgage rates at that time? Do you remember those at all?
So when I first came on board with Manzil back in 2021, I remember that we had a 25-year murabaha that was at like 6.25%, and the musharaka was at 4.4% at that time. But they were also pegged to the 5-year Canada bond. Like that was basically the baseline. However, today, depending on the term that you want to enter into, it's pegged to the Government of Canada bond equivalent. So if you want to do a 2-year fixed profit rate, then it's fixed according to whatever the 2-year Canada bond is. And because of the way these bonds work, generally speaking, whenever you lock in your money for a shorter term, you're not going to get as good as a return as you would say if you were to lock into the 5-year. Ironically, this makes it way better for Muslims who are looking to buy with Manzil, who want to lock into or take advantage of a better rate over a shorter term, and then kind of renew based on like those economic factors, like in the next couple of years or in the next 3 years, because the bonds are just built that way, right? So when we're using that as a standard, you have, say, the 2-year bond is currently sitting at, say, 2.8%. And by the time you add like the extra profit on top of it, it's going to be sitting at 6.8%, right? So the reason behind that is obviously the cost of acquisition, where you have the big banks where all of our money is sitting right now. We're not getting anything out of it. And if we do, we're going to have to, you know, purify it and donate it. They're getting essentially free money and they're selling it at 4 or 5% right now. Whereas, say, the Manzil Mortgage Fund, if you're invested in it today, your annual dividend is sitting closer to 5.5%, and that's after, you know, the MER and all of these like extra fees, right? So for us to be able to pay out an investor who's like at that range, we obviously have to charge much higher because our cost of acquisition is much higher. And a lot of the time, it's really hard to get the average consumer to understand that. All they see is the final numbers. It's like, why is TD giving us, you know, almost 3.5% for an insured mortgage, and you guys are almost double that? Well, it's because the money is.
Do you know? Maybe it's not your sort of position or job. do you know the mechanics of how this stuff works with any halal mortgage? Like
So
you mentioned a few things in here, like just to clarify for people who are not understanding of the, you mentioned the 5-year bond, the 2-year bond, and those are, interest-based investments, and they have a rate attached to it based on what's going on. And then the confusion is like, okay, wait a minute, why are we even using these products or these fixed income instruments to determine what I'm paying on a halal mortgage? Like, isn't it just another version of interest-based investment? Like, what's going on? It gets a bit confusing. I know how it works, but if you know how it works,
no, like honestly, like that's a fair question, and a lot of the time I do get this question quite a bit. It's like, why are they, basing their, their profit on a ribawi like number, right? According to AOFI guidelines, a Islamic contract can't have any ambiguity or uncertainty in it. So the only way around that is to find a publicly available like number to fix what your terms are with regards to your profit. So a lot of the Islamic world, like say in Europe and whatnot, where Islamic finance is more organized, uses LIBOR as basically the baseline standard. So that's like the London interest like overnight rate or whatever it is, right? So that most of the banks use, even though this number is based off of, the number that like banks use to interchange, but there's nothing wrong with setting that as the standard, because the mechanism behind the acquisition of the capital and the way it's deployed is completely different. Our esteemed friend Dr. Muhammad Sawaf always uses the example of the steaks, right? So you have 2 steaks in front of you, one is halal and one isn't. How can you tell the difference? You can't, unless you were specifically told which one had the process of, the animal being read like Bismillah over it, cutting the jugular, allowing the blood to flow, for it to actually be a halal product. So at the end of the day, you have 2 steaks in front of you, or you have 2 mortgages in front of you. Rates could be exactly the same and using the same standards to determine it. But what's the process to getting to that final, mortgage amount that you're paying every month? That's what's the most important thing behind it. So regardless of having, say, a publicly available rate like the 5-year Canada bond, that's just to eliminate the gharar or the uncertainty from the Islamic contract.
Fair enough.
Can I take over?
Yes, go ahead.
Okay, I have to summarize the Sharia compliance components of this to make it clear. So I'm going to summarize, Nader, what you've said, and then I'm going to jump into my next question. So the biggest difference between a conventional mortgage and a Sharia compliant mortgage is that the conventional mortgage has made money the commodity that is being bought and sold and being made a profit off of. In a Sharia compliant mortgage, the product will always be the home, right? So this is the part that Nader was talking about. That is the process of how you get to the mortgage, right? So the Sharia compliant always will make profit off of the house. The non-Sharia compliant or the conventional is making money off of money. And that is the biggest difference. Number 2, I want to highlight a point that Nader made, that you should always speak to your local Imam or Sheikh before implementing a fatwa in your life. A fatwa that was given to someone else is not necessarily applicable to you. So always make sure that you are doing your own religious due diligence and making sure that you're doing things properly, so that on the day of judgment, if something goes wrong, you can say the Imam or the Sheikh, he's the one that told me to do this. Number 3, I will highlight this fact that I am not aware of any fatwa that allows you to take a conventional based mortgage for commercial purposes or for investment purposes. It is only for your primary residence that you are living in. People have started taking conventional mortgages for their businesses, for their 2nd, 3rd, 4th summer houses. There's no fatwa for that. And I think our audiences need to know that. The 4th and last point, the 3rd point that I'll highlight over here is I really want to give a big push to make sure that we support our Muslim institutions, right? Even in the chat right now, there's a brother that's asking, why are Sharia compliant mortgages so expensive? And this is where, if we do not make the mainstream and we do not make the buy-in more, as in more frequent, prices will always be high, right? As long as the supply remains low, the prices are always going to be high. We want to make sure that there are more Sharia compliant mortgages that are being given, so that the overall costs go down. the only way that happens is if we support our own institutions. So I want to tell our brothers and sisters out there that are listening that yes, when you take a Sharia compliant mortgage, you may be paying more, but do so with the intention of supporting our institutions so that we can keep our money within our community, right? That has to be the intention behind it. So now, Nader, let me get to this question, bro. In my research, one of the biggest reoccurring themes with high net worth families and those that have generational wealth is that they've taken real estate as an investment. So give us some guidelines, give us some things to look out for. What should we be looking out for when we're thinking about taking real estate as an investment, inshallah?
So you kind of have to think beyond the cheap price or the hot area, like, fads that a lot of people will kind of sell you on. Like this is like, making guaranteed money or guaranteed bank, but there's always risk in like a real estate asset, especially depending on what type of like home it would be, right? So if you're going to buy a home that's a detached property or a freehold property, especially if it's a little bit older and needs a little bit of work, there's always going to be the possibility that, you're going to have to replace a roof, you're going to have to replace some electrical, you're going to have to replace some plumbing. If you decide to rent it out, especially with how, generous the landlord and tenant like relationships are here in the tenant's favor across Canada, you're always going to be put in a position where you're going to be maybe like losing out on your return on the investment. So usually when we have investors, they need to take a look at the numbers, not necessarily what the purchase price is today and then what they're going to be selling it for 10, 15, 20 years from now. But you also need to take a look at the sunk costs that you're going to be using over time. So if any of these things like kind of come into play where you have a tenant who just doesn't want to leave, you have like a deadbeat tenant, or you have parts of the property that are needed to be changed and so on and so forth. Like there's a fair amount of maintenance that is needed for a property, right? Whereas if you were to say buy a condo, there might be little maintenance involved because you don't need to change a roof and a lot of the stuff is covered like within the maintenance fees that you pay every month, but you have maintenance fees that you pay every month. So it's like you're already bridging the gap between that return on investment by adding that extra layer of security or insurance to help maintain the property for you, probably better than you would for like, say, the risk of taking on like a property that's like, a freehold where you have to have the full responsibility for you. And even if you're buying, say, brand new construction, like there's always, if you've seen like the videos where, like we had this development in Vaughan a few years ago where we had like a really rough like windstorm and there was like a tornado warning, and literally all of the development felt like a house of cards just because the building code isn't what it used to be, and the materials used aren't what they used to be, and there's always people trying to cut corners, and it's a vicious cycle. So a lot of the time you have to be very careful into what kind of investment you get yourself into. And believe it or not, like investing in real estate isn't for everyone. It isn't even probably for maybe 95% of the general population, where they'd probably be better off investing it in stocks or in like, some sort of other halal investments where there's much lower risk, but there isn't the possibility of these unknown like issues that can pop up like over time. So you have to kind of understand the type of cash flow that you can possibly generate from these types of investments, what you're trying to do with this investment. Are you like, trying to buy properties to flip them? Well, guess what? CRA just decided to like, make it a whole lot harder for people to try to like flip homes, especially with like reporting guidelines now. Whenever you purchase a property, you have to include the agreement of purchase and sale with your taxes when you file at the end of the year. So they're trying to monitor that a whole lot more. And again, you have to think long term with real estate. It's not one of those like, quick flips. Like if you were to buy, like say in the fall of last year, and you renovated the property and then you decide to sell it today, the prices are down almost 3-4%. Plus you have this money that you put in to renovate the property. Plus you're going to have realtor commissions and legal fees and all of that stuff. It's just a loss all the way around. So it's not like where we were, like say from 2017 to 2022, where the market just kept like, exploding day after day after day. You really have to take into accordance why you want to do this. Like, do you already have like a decent portfolio and you're looking to diversify? Maybe like buying like, a condo and just getting your foot through the door might be good. Or maybe you're a seasoned investor and you might be looking at, say, a commercial property, because maybe commercial tenants are easier to deal with than you can with residential tenants. But even now, commercial real estate is, starting to flounder as well because of, a lot of people work from home. There's a lot of like stuff that's generally done online. So a lot of like the major real estate from a commercial perspective is trying to get converted now into fulfillment centers just to accommodate for all of these like different types of for businesses, right? So again, building wealth takes patience, takes discipline. It doesn't require speculation. Sure, like a little bit of speculation goes a long way, but like maybe when you're allocating 1 or 2% to like, Trump coin or Melania coin, but not necessarily, like going for the full, deep end dive into buying like, real estate and like hoping and praying that it'll just go up.
Jazakallah khair. I think those are some very, very important points. You have to have the appetite of dealing with tough clients when you're getting into real estate for sure. I want to go on a quick tangent with you. In the crypto world, there's always this talk of the tokenization of house sales and possibly turning them into NFTs and stuff like that. What are your thoughts on that? Do you think that's going to make things easier, make things worse, or it's not possible?
I think it's an interesting topic. From a Sharia perspective, this would make investing in real estate a whole lot easier, right? Because we would be able to essentially verify these transactions at like, a higher level than what we would be able to right now. Like there's a lot of, real estate style halal investments that people come up. Essentially, it's just like a pool of investors putting their money together and buying properties, and each one gets their shares and whatever it is. But, tokenization of these like shares or these assets would make it so much easier. And it would open up like, the investor pool to like, if my cousin in Egypt wants to buy a couple of like, tokens or assets of like, a place down the street from me, then he can do that totally, right? There wouldn't be any like restrictions on that. But I think for it to be implemented, there definitely needs to be a lot more regulation that comes into play, because right now, whenever there's like fear or unknown or uncertainty like around this, governments are very quick to come in and like put the kibosh on it. Like obviously you have a lot of Middle Eastern countries issuing fatwas that crypto is haram, right? Just because they don't want the people to like, be able to decentralize their own currency. They want everyone to like put their money in their central systems and their banks, because that's what's good business sense for them at the end of the day. But it's definitely interesting, and I think it's something to look forward to in the future, especially when it comes to managed assets and portfolios like like those crowd-funded like investments with our Muslim community.
Jazakallah khair, Nader. A quick follow-up to that. With regards to Manzil products, have you guys publicly announced stuff that's happening in the States yet?
We haven't publicly announced it yet, but
breaking news.
That's why I asked very vaguely. I don't know if it is breaking news. I don't want to ruin anyone's surprise.
It's been public that we acquired Agaz last year, and
Correct.
This helped us to essentially put our foot in the door in the States. The good thing is about the US is that things move very quickly as opposed to here in Canada. Like in Canada here, we tried like setting up our own our mortgage fund to get it to be traded like in an ETF style, where it just makes like the accessibility and the distribution so much easier. But we weren't able to get it because we weren't able to get a market maker here, right? However, in the States, we're again like this is like on the down low. So anyone who's watching this podcast will probably hear.
Don't share it with anybody. Don't share it on social.
No, man, this is good news. Let Nader share what he wants to share.
So essentially, we have a couple of ETFs that are in the works right now that are in the prospectus stage. So we would have our mortgage fund that would be traded on the New York Stock Exchange, as well as our own equity portfolio that would also be traded there, where it would also help us reduce our own management fees, since we wouldn't necessarily need like a caretaker like OneVest to like run our investments for us. We would be able to do it ourselves. And again, like Sharia portfolio went through this a long time ago because they weren't able to get a market maker here in Canada, so they went the US route. Now they have probably the most solid like halal ETF that you can possibly buy. Like obviously there's nothing that's perfect, but it's good enough for the average Muslim investor to kind of get their foot in the door. So with that being said, once we're able to kind of turn on these ETFs, it's just going to make investing into the mortgage fund that much easier, especially with our team being at EXP. It's going to make us able to launch our realty product across the US fairly easily. Because again, Manzil does require that, when you're purchasing with them, because it is a musharaka, it is a partnership. It's not like going to the bank and giving them a contract and wanting to get money in there. They want to be involved in the acquisition of the property. So they require that their own agents are involved in the transaction, especially with all of the unique clauses and the agreements that need to be tested prior to that. Again, we had a lot of growing pains when I first joined in 2021, but alhamdulillah, we have a great system now. So it makes it easy for us to turn on our realty services in pretty much any state. And as far as I know, the first target for us is going to be in Houston, inshallah. So that's kind of something where we're hoping that maybe by the end of next year, we'll probably have a few homes that are financed in the US using the brand new ETF, but it's also going to mean a whole lot easier access to capital here for us in Canada. And inshallah that happens, because again, the States is always where the big show is. Here in Canada, it's very difficult for us to get regulation from province to province, which is why we're say we're available in BC, Alberta, Ontario, maybe Quebec, depending on the day. And we're still working on getting the ability to turn on our services in other provinces like Saskatchewan and Nova Scotia, and Manitoba is so difficult to try to get regulated and licensed there. But alhamdulillah, the Premier is trying to push for us as well. So Alberta is actually leading the charge for us to make it easier for people to understand what a halal mortgage entails. It's not where people are so pissed off. They're oh, why aren't they paying interest? And why do I have to pay interest? They really don't understand what's happening in the background, right? But inshallah, there's a lot of positive things coming down the pipeline at Manzil, along with our US product offerings, especially with us being able to turn on these investments and our partnerships that they just announced with Alpaca, which will also allow us to turn on crypto investing accounts for our clients. We just need to get our Sharia board in line with whether or not crypto is halal or not. So I mean, we'll have to cross that bridge when it comes there, but at least there's a lot of good products and a lot of good news and a lot of goodwill that's happening with our foot now in the States, alhamdulillah.
Nader, give me a big takbir, bro. Takbir. Allahu Akbar. So very last question, and you can just be yes or no, but do you know what the target yield for the real estate ETF is going to be?
So if we're using the current model that we have right now, I would have to say that the dividend is going to be closer to the 5.25%, 5.5%. It really depends on what the average yield is from the mortgage product itself that we're using to finance these properties. And with a lot of people currently choosing to use the 3-year option of the musharaka, we're probably going to see a small dip in that once we have obviously more properties that have been funded. But I would say a good amount from at least 4.75 to 5.25 with little to no equity loss, right? So
inshallah. Was that Sawaf messaging you? Why are you spilling our beans?
Let me see.
Barakallahu fikum.
No, it's my other boss.
Your other boss, alhamdulillah. I don't want you to get in trouble, but Jazakallah khair for sharing that amazing news. May Allah subhanahu wa ta'ala bless it and make things easy. Ameen.
I mean.
Hash?
Yes, Jazakallah khairan. I always say about real estate, there's two types of people that exist in this world. Either you're a landlord or you're not. And there's nothing in between. You either love that stuff or you absolutely hate it and despise it. And it's nothing in between. I'm on the other category. Can't be a landlord. Don't want to be it.
It's the worst thing in the world to be a landlord, to be honest. Like, I always advise my clients against it. A lot of people have the foresight of wanting to be, getting their foot in the door through their primary residence, but then they want to rent out a basement, right? Well, yeah. I'm sorry, it doesn't really work out that you're going to get a perfect, tenant who's going to take care of your property and then pay you your rent, and then you're going to have to chase them out. Like, I've seen so many horrible scenarios gone wrong because of this. I actually have one deal that isn't closing right now because the tenant just decided that he doesn't want to move out of the basement.
Yeah. Yeah.
And they've even tried offering them cash for keys. They've actually offered them close to $25,000 just to be able to leave. And the guy's paying $1,300 a month, and comparable units around the area are probably going for $1,750 to $2,000 a month. And he just doesn't want to move. So unfortunately, we're stuck in limbo, and I kind of feel for my clients too, because they gave notice to their landlords, and now they're going to be homeless in a few days. So inshallah, Allah makes it easy, and we try to find a good solution for them. But this is just the reality, where we have at least 25% of tenants becoming delinquent within the first year of their leases here in Ontario. And for you to be able to kick them out, to get an eviction order from the landlord and tenant board, depending on where you are, can be between 6 to 18 months. There's such a huge backlog, and because the government really doesn't care about, something that isn't a loss in their pocket. There's just not going to be that incentive to get the ball rolling to help, streamline, say, delinquent tenants who aren't paying their rent, to get them out. So may Allah make it easy.
Inshallah.
Ameen.
Nader, bro, you talked about clients, you talked about tenants, and actually there was an article that was shared with me in WhatsApp group, which talked about a specific realtor that had, led a good friend of his to invest a whole bunch of money into a pre-build. I think it is a big deal, I guess, in Ontario and in Vancouver, where you put a whole bunch of money down payment, and then they're going to build a condo, but they're going to build it 3 years in the future. And the idea is that you buy it now in the hopes that in 3 years from today, that condo's worth a whole lot. You get the down payment in, you get the house, the condo closed, and then you flip it right away. Of course, the deal went sour, the condo never got built, and the guy lost all of his payment, and then the two of them were fighting. So I guess from your perspective, having seen probably a lot of these scenarios, especially with the downturn that's happening in East and West here, what are some of the biggest signs that you may feel where the realtors may not have the client's best interest at heart, and they're basically trying to make that sale? How do you pick a good realtor versus the one that's not good? I've dealt with both of them, by the way, just so you know.
Well, I mean, let me just address the whole assignment scenario off the get-go, just because this is a huge problem that we have here in Ontario, and even in Alberta and Calgary, with a lot of newer units, and a lot of people can't close these because what they were planning on doing was putting a small down payment, 5%, 10%, and then waiting for just prior to the closing, and then selling off this contract, right? A few years ago, I made a video that I got in trouble for at Manzil because the Sharia board didn't agree with my stance on assignments. Because apparently you can't profit from an assignment because you didn't have possession of the asset, right? So when you're doing something like this, you either have to sell it at cost or lose money in order to be able to participate in this like sort of assignment, right? Since like contractual rights are not something that you can profit from unless they're trademarks or copyrights or whatnot. Again, I had this discussion with Mufti Mirza, and we were on for like almost a few hours trying to like justify it. It's like, but what if it's in the contract? They allow you to like sell it as an assignment. It's like, bro, it's just like having a marriage contract and there being, an allowance for you to go swing on Sundays. So, I mean, just because it's in the contract doesn't make it halal, right? So, I mean, you just have to like kind of think of it.
Just for reference, our webinars are meant to be, children and family friendly.
I guess they're
okay, keep going.
Surprised when they put it into the Google search later today. But honestly, when it comes to red flags with realtors, because here on the Toronto Real Estate Board, we have over 70,000 members, right?
Whoa.
So that's literally one realtor for every 6 people in the GTA, right? And over 50% of them don't do a single transaction per year. Now, a lot of the time, people just hold licenses so they can have access to the MLS, like where moving companies like to do this so they know who's bought and sold so that they can market directly to those people, or lawyers so that they have access to the MLS system, so it makes it easy when they're preparing like their contracts. But again, it's still a huge number where you're talking about almost 40,000 people aren't making a single dime in the real estate market from like a commission on a sale. And then you have an additional 14% that only transact 1 to 4 times during the year, right? And most of the time when you have like agents who are well respected in the market, they're the ones who are in the top 5% who are doing, 20, 30, 40 plus transactions every year. So when you're dealing with a lot of competition here, especially at the bottom, one of the main value adds that a lot of these realtors have is by giving cash back to the clients. And this is a huge red flag. So if someone's willing to give you a part of their earned income just for you to be able to use their services, like they're not going to have your best interests at heart. If they're ready to give away 50% of their income to you for no reason, and then you're going to be negotiating for them, like, why would I care about, saving you some money? And a lot of the time I always tell the clients who come to me and ask me for like these types of incentives, I tell them, well, if I'm not able to save you that much during the negotiating process, then what am I doing as a realtor, right? It's the same thing like going to a doctor or a cardiologist and ask them for a discount on your heart surgery. Like, why would you want somebody who's going to allow for something that to happen just so that he can work on the surgery? Like when you want to, when your health is involved, you want to have the best professional, period. So obviously you want the most well-respected doctor. Doesn't mean that they're cheap. Same thing in real estate. If again, a lot of the time it doesn't cost buyers anything to work with a realtor. Obviously, when you're selling, there's commissions that are involved. But as a buyer, why wouldn't you go for the busiest realtor in the market? Because they're the ones who are going to be in and out day after day, looking at the inventory, dealing with other realtors, knowing exactly what's happening, as opposed to your brother-in-law's cousin that was twice removed, that has a license and can help give you half of his commission just for using him at the end of the day. It's a huge red flag. And again, avoiding tough conversations about budget. So one of the main things that I like to do is I need to make sure that this client has already been underwritten and has a pre-approval. Especially at Manzil, that's at paramount importance, because a lot of the time what people have been able to do, and I've talked to the brass about this so many times, where they have an online estimator of what your mortgage pre-approval would be. And a lot of the time, clients think that this is actually their pre-approval. So they'll start shopping the market, they'll start looking at homes. Some will actually put offers on properties without really knowing anything about the process. And they're like, well, I got pre-approved online. It's like, well, did you give us any of your income documents to verify those numbers? So again, pushing for figuring out what the budget actually is prior to shopping. It's no different than going to the mall without bringing your wallet. Why would you want to go if you don't know exactly how much you have to spend? right? Just having your phone and tapping it everywhere you go is not a strategy, right? So that would be a huge red flag. If you reach out to a realtor and they're just taking you on showings right away without asking anything. Like a lot of the time, we always push, like especially our team members, to get a representation agreement signed prior to even showing a single property. And if somebody doesn't want to like agree to that, then that's a red flag. I mean, just because you're able to go to, like, let's say you're going to go get a massage, they're going to bring a waiver to you and make you sign a whole bunch of stuff right away before you even enter into the room. So why is it any different where, you contact a realtor so that they can show you a property, for them to be able to put a contract to say like, hey, if I show you this property and you end up buying it, then I'm going to get a commission from this sale, right? So if they don't allow for something like that to happen, they're either already under contract or they're just, tire kickers who are going to waste your time. So having a realtor that will accept, like pretty much any business whatsoever, that's also a red flag. And obviously the lack of transparency in commissions and clauses, like this is something that especially part of our fiduciary duties is to have full accounting. So if they are bringing you to a certain property and there's a special incentive or a kickback, if you're able to get an agreement where the commission is much higher, or where there's like, an incentive to the realtor to, like, by getting them to agree to a contract by a certain date, then there's a bonus that's paid out. A lot of the time, like, these realtors won't disclose that. Or they won't make it, or they'll bury it in the paperwork. So like they've already signed it, but they're not aware of it, right? So this would be a red flag if you're not having someone like fully tell you, basically having your best interests at the forefront, and they're just kind of thinking about them. And again, this is the problem when you're dealing with agents who don't transact. They have commission breath. Like they'll do anything to get the sale. They'll tell you, yeah, this is the best purchase that you can possibly make. And, especially because I'm on the other end with a lot of clients who decide to work with their own realtors at Manzil, and because Manzil mandates that they need to work with us, and there's always going to be a commission share at that time. First of all, they're always fighting tooth and nail because they're already giving most of their commission to the clients. And a lot of the time, like the price that they end up buying the home at is not anywhere near where I could have probably negotiated for that specific deal. Like I had one of these that really came to mind like last year, where the condo market is so depressed right now. Like you could literally get anything at any price for whatever.
Perfect.
Offer date. And the guy pushed him to go maybe 30K over like the last like sale, just because they really liked the property and they were sick and tired of losing out on offers, right? But I know for a fact that had we really pushed the envelope, we probably would have been able to get it for at least 30K less. And the guy was only getting like say 5,000 from his realtor. So if I'm not able to save you at least that much, then what am I doing? Like I'm no different than dirty Uncle Sal, right? And again, you have to protect yourself by asking a lot of questions and asking the tough questions and demanding clear explanations, especially when I work with Manzil clients who most of the time the conversation is centered around the product and whether it's halal or not, or am I really is it really Sharia compliant? Do I have anything to worry about? You have to make sure that a lot of these explanations are clear. Everything is documented and in writing. And if they're not able to, answer basic questions, then why are you even working with these guys to begin with?
Fair. Good questions. Awesome. I think there's good and bad advisors everywhere. There's good and bad doctors. There's good and bad realtors. There's good and bad mechanics. I think just, getting a sense for that. There's some great points, by the way, that you mentioned. And I think we can probably put into a simplified reel and share with people to go through those points so they can remember it. I know we're over about 4 or 5 minutes. I know, Sheikh, you want to ask Nader some stories from the
100%. We always got to end off on a fun note.
Okay.
So I want to hear this crazy couch story, and I want to hear more about this client that wanted to take a dump in every house before he bought it.
This is going to be listened to by children, by the way, just so you know.
So when it comes to this deal that we almost lost because of this stupid couch, basically This property was.
By the way, just before you proceed, these are stories from the field, right?
Yes, that's
stories
right.
from the field. Okay, so let's give some context. So
experience in the field, right? So, I mean, last year I had over 60 transactions, and this year we're on pace to do almost 100, alhamdulillah. So there's quite a few stories that are out there, right? So, so this one house was an estate sale, right? So it was a very tough situation for the seller. Her husband had passed away after working through his illness. They listed the property for sale, and then she passed away, and the kids had to take over to sell this property. So even before going, they had the property initially on the market, they had to take it off and then go get a probate certificate from the city of Toronto, and that took around 6 months, right? Once they got the probate certificate, they relisted, and that's when my clients were interested in buying the property. For the most part, if you were to compare a similar property that was fully renovated, it probably would have cost an extra $400K. So this was a great deal by any standards. And there were other offers that were on the table as well, and we had won out. The one thing is that because it was an estate sale, they wanted a lot of the stuff that was currently in the house to stay with the house. And they didn't want to have to, get things thrown out or sell it or whatnot. They just wanted us to take over. So for the most part, we wanted all of the chattels to be removed from the property, and they were okay with that. Enter this ugly green couch in the basement. And this, like my client said, this is the worst couch I've ever seen in my entire life, and I want it gone. So I put it in the exclusions in the agreement. The realtor sends it back and crosses it out. They're like, look, the kids don't want to have to deal with it. It's a heavy couch. They want it gone. They're not going to move it out. They want your client to take it. So I go back to my client and I explain it, and they're like, absolutely not. They need to get rid of this couch. So I go back to the realtor and I'm like, is this going to really be a problem? Are we really going to let this deal fall apart because of a couch? Because if we are, I'll literally go myself and I'll pull it out of the basement myself, right? And she said, for them, it's take it or leave it. And essentially, that's kind of what it came down to. So it came down to me convincing my clients, because again, they're Muslim clients. They moved there because literally the way the backyard is set up, there's actually a gate that takes you into the commercial parking lot that's behind there where the masjid is, right? So for them, it was the perfect setup. So I told them, look, you don't want the couch, I get it. Just let's take this deal and let's deal with getting rid of this couch. And the minute that we finally had the deal accepted, we called a couple of the youths over from that masjid and say hey, do you guys want a couch that you can put in your gaming room? And they're like, yeah, for sure. So they literally showed up prior to the closing and helping the seller get rid of the couch and literally walk it through the backyard into the masjid. So that we almost lost the deal because of that couch.
That one couch, man.
It was
taking it out yourself.
Couch. So when I was trying to sell it to the client, I was like, look, it's Jannat al-Firdaus green. I know it's essentially an ugly big couch, but they don't make it like they used to. So the wife was completely against it. She's like, I need this out of my house now.
Okay. Last story before we go. Last story. We have to.
So the other one with the client who needed to test every washroom, and he was a unique character himself. So we had gone to see at least 20 homes, and they all had to be in the evening after he's had dinner, so that he can test how the washroom will work. Because he wanted to make sure that his bowel movements would be easily expelled from the house without there being any major issues. Come to the last property that we saw. We were already running late for our showing, and he still said, I've been holding this for the last hour or so. I need to use the washroom. So I'm like, okay, you do you. And I walk into the living room just to give him a little bit of privacy, and then the owner walks into the house because we're over our showing time. So I'm like, hey, how's it going? Sorry, we've been running a little late. And the guy's like, oh, no, it's not a problem. Take your time. We'll just step out into the car. Just as he was about to leave, you hear the toilet flush. And the guy comes out and he's like, yo, this is the best. I need to. And then as he's like walking, the smell hits you the minute the door opens.
I was just going to say, I hope there was a candle or some air freshener, man.
No, because the owner had the door open because he was about to leave the house. And then you have this washroom that opens up. So there's this draft that comes with the stench all the way out. And then I was like, yeah, this is my client right here. Unfortunately, it's the washroom. And
Did you buy the house? Did you buy the house?
Alhamdulillah, he actually did put an offer on the house, and we had to go back and forth.
On that one? Okay.
On that one, and that was the house he ended up buying. Like, I mean, sometimes some clients have a little bit of, like, a couple of quirks. Like, I had a client who had to ring the doorbell in every house that we saw, just because he wanted to make sure that worked. Because apparently in his family home growing up, that the doorbell wasn't working, and he ended up missing like a delivery for like something that he had ordered, and he was just so upset about the whole ordeal, where now he's like kind of traumatized by needing to have a doorbell that works. So like every house, right before we go in, he like taps it twice and makes sure that it works.
It works, yeah. Amazing. Jazakallah khair, Nader. Jazakallah khair to you. Jazakallah khair for your time. We appreciate it. This is extremely informative. We will share this with everybody and then have the podcast and the video format available. I'm sure you will see a bunch of reels from this as well, both on my Instagram and Nader's Instagram, Navaid's Instagram, and LinkedIn and stuff like that. I appreciate you, man. It's been a pleasure knowing you and working with you, collaborating with you. And inshallah, we'll look forward to much more collaboration in the future. I know there's stuff going on with Manzil that I've been having a conversation with. So inshallah we can help with some of these products that you guys are launching and make Islamic finance easy, right? So if me and my team at the South Vault can make it so that it's funded properly, so there's more money is available that you guys can lend at lower rates, so we can help people buy their home, their halal, finance. I'm sorry?
There's no lending at Manzil. There's no borrowing. There's no lending. It's only financing as a partner, right? So
correct.
You have to get the legal first.
Yeah, inshallah. So we'll look forward to that. So Jazakallah khairan. Sheikh, if you want to have any last words, inshallah, we'll take it.
No, Jazakumullah khairan. This is a fun podcast. I had a great time. Jazakumullah khairan for joining us, Nader. Always a blast spending time with you, whether in person or virtually. Barakallah feek.
Wa feekum, barakallah.
Assalamu alaikum, guys. We'll go offline. We'll talk to you.